Alright, Forex market. We're back. Second analysis for the day today, guys. It's the pound versus the New Zealand dollar. We owe you a bit of an update on this one. We don't want to leave you high and dry. But I'm sure you know we're just coming off a very successful bearish campaign. It was a quick one, right? We were just aiming for 200 pip from 96 to 94. We called it out right from the beginning, right from price started to turn around. I mean, there was this really strong move that started positively, right? And then it tried to penetrate 97.77. That was a bad idea because that level not only held, it completely changed the direction of the movement, right? Big push. Price started to turn back down and it ended up very negatively. We saw that as a big sign to pull the trigger, right? And we did that. Now we did that in two steps. The first one was right there. We pulled the trigger the first time. Then we saw the second day as a big, vote of confidence on that turnaround, and we liked that, so we pulled the trigger again. And target was 94.06. I know, right on the button, right? Laser sharp precision. We're out, right? We're out for a few days now. So, sitting on the sideline, waiting for the right moment to strike. Here's what we know so far. Let me lay out the evidence. Right? We know we're trading in a trading range. We know this key level system that we have, the blue one, is valid because it's been validated, time and time again. Just recently with that taking our target at 94.06, that's a validation on its own. So, we know price is trading sideways. We know it's probably, here's what else do we know, right? We know it came from a definite high, right? And we know it didn't take the previous lows yet. You see where I'm going with this? Now, we think we had a bit of a correction, which is expected after hitting that 94.06 big support. So price naturally, pushed itself off that level, and we think it's for a good cause. It's for a technical correction kind of cause, and now it's hitting the end of the road for that correction. 96.02 is pressing from above. That's a big resistance level, and here's the evidence. I mean, we see price tag that level not once but twice already, confirming the resistance coming from this area. So if we read this correctly, we figured out that the continuation of this movement is imminent. I mean, I'm talking about movement. I'm talking about that downside movement, right? Not that correction phase. So price should find some resistance here, turn back down, and naturally, casually continue that downside move, which is the same leg, by the way, right? If this is a correction, it's the same leg still in play until it takes the previous lows, probably penetrate that area, possibly even, spiking the bottom support here, touching base with the 92.31, and only then we should see a turnaround, a real turnaround that will take us back to the upper section, right? So yeah, that's pretty much the story we have for you guys on the pound New Zealand. But here's the bottom line, right? Here's the bottom line. We're pulling the trigger. So we're reactivating our bearish campaign again. Exactly like last time. It's a quick one, right? We've been in and out with the previous one in a matter of 3 days, I believe that was. Taking those 200 pip. Here we're aiming for another 200 pip. This time, previous lows, it's actually a little more than 200 pips, 230 pip, right? And we think we can conquer that area again in a matter of a few days. Hopefully sooner than later, but we'll see how it goes. Price needs to start to turn around here. Needs to find 96.02 as a definite resistance level, and once it starts to turn red, we'll start to gain that confidence that we're probably looking at price resuming on the downside. So we'll see how it goes. But again, bottom line, we're reactivating pound versus New Zealand dollar using 93.30 as the main target. 94.06 could be a secondary target. We'll see how it goes. All right, guys, that's about that. Pound New Zealand, that's about it for today. We'll be back tomorrow. Cheers.